Hi, my name is Ken Poletski with Community Real Estate Group Keller Williams right here in Southeast Washington State. It is March. The first quarter of the year is quickly approaching. So we are here to give you your monthly market update. I hope you've been subscribing to our channels, getting updates on what the market is doing in the Tri-Cities area here in Southeast Washington. I'm Ken Poletski, and one of my passions is, of course, helping people and educating them on what's going on in the real estate market, giving them advice and consulting with them, and of course, handling all of the other aspects of the real estate profession. So I'm going to jump right into our market report. There's three things I like to point out here. Is the active is what our future data looks like. And this is every seller that's hoping to sell their house, and every pended properties, actually real-time data of what's going on. Those are homes that are under contract with buyers. And then of course our sold data is our rear view data. That's kind of, looking over our shoulder, if you will. And that's going to be something that we can use to project or forecast what the outcome of the year would look like, or what your chances of selling in this market, or chances of buying, when you should buy, those types of things. We don't profess to have a crystal ball, but we do pay attention to the numbers because the numbers do show us, give us indicators, if you will. So let's just jump in and tell you what's been going on in the real estate market here in Tri-Cities. So the market inventory had climbed over the last couple of years. So in 2022, when the interest rates started to go up, we saw, January of 22, just to give you an example, there were 199 homes on the market in that first month of the year. Very low inventory for buyers, very low inventory for good opportunity for sellers because they were getting maximum prices. But what happened? The interest rates changed, right? The interest rates started to inch up, the buyer pool started to shrink back, and then the market started to shift. And so we started to see active count numbers rise. And we peaked out in November of 2023. Every month it went up a little bit. And in November of 2023, I think our first, our monthly report that month was 1,038 active properties, right? Over 1,000 homes. And we hadn't seen that for many, many years in the Tri-Cities, and gave buyers lots of options, except the interest rates were so high, they didn't want to pull the trigger. We were getting up near 8% on the interest rates. Well, we've seen that come down a little bit. And in recent months, we've actually seen the buyer pool pick up, right? They've kind of gotten comfortable with the higher rate and are taking action, because the consequences would be if they don't and they choose to wait. And I hope you're not that buyer out there waiting too long, because if the rates drop, you're going to be flooded. Because if the rates drop, the market's going to be flooded with buyers, and then you're going to be competing with buyers that you hadn't competed with. The inventory is going to also drop, which means the home sellers will begin to push their prices up, right? That's highly likely predictable in what we see happening, or what I've seen over the years that I've been doing this in real estate. So that all being said, let's look at those active numbers. 909 is what we started the year with in January. Remember 2022, it was 199. This year we started with 909 homes active. Last year was only 738. And in February, that number dropped a bit. It was cold. We got some snow. So that's typical for our region. We did get that. 879. And then last year at that time, it was 727. Interesting numbers are in March of this year. We're at 875 is when we start, right? So 875 and 723. If you look at those numbers, it was kind of didn't start ramping up in 2023 because we were kind of in shell shock, not knowing what the feds were doing with the darn interest rate. And we saw that climb up, if you look at that chart, all the way through to the end of November in the green lines of what that inventory is looking like. So we started the year out pretty strong, pretty high on inventory. Great for buyers, gives you lots of options of homes to go look at. And then interesting numbers here, if you look at those dark red numbers, that's new construction. And the new construction market says, hey, I'm about a third or over 1/3 of your market is new homes out there. So I like to tell buyers, exhaust the inventory that you have, jump into a new homes if you are ready for that. But we've been watching that because at the slides you'll see here in a little bit, new construction had to make the biggest shift because that's a business and not an emotional tie to a family home or a home that you have lived in for the last 20 years that you're selling. So it's a little bit different business or outlook on how to shift in a shifting market. But 350 homes current market is actually new construction. So let's see what those prices have done. Really busy slide here. I apologize. I put it in red on the 2 months we're talking about in March. But the numbers to look at here are the green numbers. The light green is the new construction and the dark red is new construction. Look at the price gaps there. $637,000 average last year. This year was $551,000. You might think that builders just slashed their prices. It's really not what happened. What they did is they cut back on some of the square footages, right? They made smaller homes more affordable. They took out some features, right? Some things that would be extras to get the prices down that home buyers could actually go back in with later dates and add to that or something along the lines of a future benefit. They did that strategically. If you looked at both January and February, it was very similar, 636, 628, where the averages, 550, 546, where the averages for those months. So you saw a real structure pivot. But what you look at the total market there in the light pink and the dark green, those are pretty consistent, right? Not much difference there, because what we saw last year, when you look at that, those other green to the sides, you know, April, May, June, all the way through December, you started to see declining market in the new construction, but the resale market was hovering about even, pretty close to even, staying flat line. And that started in 2022, it was much higher then. And now we've been able to see that drop. And when resale, or actually when new construction got to resale pricing competitively, what do you think home sellers had to do if their house was a 20-year-old home and new construction was being sold for the same amount? They had to pivot and start making a little bit of price reduction, maybe do some concessions. So we've seen the market shift a little bit from, 100% of list price versus sales price ratio. Now we're down to that 97.6, I think is where we were yesterday when I was looking at numbers. So anyway, I do numbers on a regular daily basis. I also provide a weekly update. This is a monthly one, bigger snapshot. So let's continue on. The days on market is something that we watch. And when we're looking at days on market, we're just trying to give a seller or a buyer perspective, right? I mean, when you start to see the days on market climb, that means the inventory, the buyers aren't gobbling it up, right? We're up to 3 months of active average days on market. That's before they've gone into a contract. And you'll see the pended properties is about half that, maybe a little bit above half. Those are the ones that were priced right, went away really quickly. Good example would be last week, we had 107 new homes come on the market, 22 actually went under contract. So, and those were in 3 days. So that skews the average a bit, right? Let's jump into this pending slide, right? So when I'm talking about numbers and what their predictabilities are, we are predicting that we may be in a market where we're going to be slightly better than last year on the total unit count. That's not saying that the interest rates are going to drop. I'm not predicting that at all. I actually think the interest rates are probably going to stay about the same throughout the year and maybe even halfway into 2025. What I am saying is when the buyers get comfortable and say, I'm just going to jump because I can date the rate and refinance it at a later date. That's what this slide is showing me right now, because the pended numbers, the dark black one and then the light pink one, if you look at those month over month, each month of this year, they've actually increased from last year. Last year in January, 251. This year, 315. Last year in February, 342. This year, 375. It continued in March. Last year was 421 pended properties. This year, 446. The same in the new construction. Like, you can look at the dark red lines and you see every month it's increased, and it was above the light gray line, right? The light gray indicates on that chart, that was last year's number. So we're watching that number and we're saying, hey, this looks pretty good. Sellers, it's time to get your property out there because it looks like things are moving again, and you might be able to get opportunity to take advantage of buying before the inventory is gone, right? If the rates drop, we know the inventory is also going to be impacted because there's a lot of buyers still sitting on the fence. There are lots of buyers that would love to buy a house right now, but yet because the rates are where they're at, they can't afford something that they're willing to buy, so they're waiting. If the rates drop, I'm just going to tell you the slide before, the 875 active homes is going to drop drastically, because imagine putting 100 or 200 more buyers active on our market. That's going to gobble up that inventory, right? It's pretty good example of supply and demand in basic economics. So watch that very closely. We help navigate with our sellers and our buyers and give them consulting and advising first, and then we go through the actions of the other parts of our real estate profession in finding, searching, negotiating the best property pricing and terms and things like that we do, right? So you can send us a question, you can email us a question, you can call me, anything like that if you have any thing going on in your personal lives in real estate. So let's jump into the average pricing and pending. So when we look at average pricing, we saw that new construction, that light gray, we saw it come down in January. We saw it come down in February. Again, last year in the light gray, in March it was 526,000. This year was 492. The gap got closer, right? That's what we're kind of seeing. The gap got closer because what happened when the builders started dropping prices, like we said, then the total market, the resale market, had to, once it got caught, right, it got matched, had to actually make some pivots and start adjusting their pricing as well, being a little bit more aggressive, maybe offering some incentives and those types of things, which the builders now seem to have gotten to pull back a little bit. But a more interesting number is, if you look at where I circled there, is that resale market, the dark one and the light pink. You know, the 448,000 for last year in March. This year was 466,000. So we increased. We actually pivoted and went up a little bit. Now I'm going to be curious in April to see what that does. If that trend line, if that was a pivoting mark and that trend line goes from there up. Because remember, in the Tri-Cities, well, actually in every real estate market, but we are seasonal too, because we get a little bit of a winter. We arc. So our January and February's are always slower, and our November to December's are slower. So in the peak months of the summer, that's when we do most of the sales volume. And a lot of sellers try to time that and get out there, but during the spring, and then sell it through summer, make their moves while the kids are out of school or whatever, or just nicer weather. And so we try to help with that, but a lot of times in the winter, that inventory is lower, so you actually get a little bit better advantage too. But that's an interesting number. I circled that on purpose because I want to watch that this next month as I see that go into April, to see what those numbers are going to look like, because we're already seeing an increase in the pendings. Just looking even at the April number to the right of that, it was 435, and we're already at 448. So we'll watch that. If we go above that again next month, we're seeing a trend right there, and we're going to watch it really close. So the pending, I told you earlier, it's usually about half. You know, actives are not under contract, so their day count is accumulating. 875 at 91 days. The pending properties are actually what's under contract, and this is how many days it took them to get that contract. 56 was in March, right? So it's still about 2 months. So don't expect obviously to be under contract right away. If you're priced right, just like I said a few minutes ago, 20% of the market last week's inventory that came on went under contract right away. The average days on those was only 3 days. So that's a good sign. So that's what people out there buying if it's priced right. Here's our arcing map, and I just leave the trend line on this one just to show you what last year's looked like in the light blue. In the light blue there, you can see, you know, it started out the year really slow, and then we peaked a little bit in that August time frame. And that's kind of normal. That's our trend line. We did see a few months there where we were up and down. So we're watching this, right? So in January of this year, there was 222 homes sold. Last year was only 194. February is the only data we have because March isn't done. So 212 homes sold last month, 239 last month this year. So we're watching it. We are expecting right now, and I just got back from the Keller Williams National Convention, and their economists, actually their numbers kind of align with our local market, which is interesting. Their economists are seeing this to be a little bit better market in unit count. We don't know quite on the volume, which is based off of the sales pricing, if we're going to see that be higher or lower than last year because of the competitiveness of the market and the inventory is being a little bit higher right now, which is an advantage. I'm just telling you, buyers, that's an advantage to you. Because if you only had 200 homes to pick from compared to 875 homes, you are very limited on your choices. You're paying higher prices. You're giving up some concessions and some terms that you probably don't want to do, like we were doing in 20 and 21. That was just the craziest market that I've seen in my 29 years of being in real estate. So it's encouraging to see the numbers up. My daughter Olivia was out showing property the other day. She actually got to show a buyer 12 houses, and that was unheard of for the last few years. So it's pretty fun to watch, and they have selections on what their opportunities are, and they're actually want a buyer that we've coached not to wait, but date the rate, right? Get in, buy the house now if you can afford it, and then adjust the interest rates when they drop and they refinance. Some of our lender partners actually have some really great rates already. Some of them have some interesting programs with the refi side of that. So let's get into the sold prices now and talk a little bit about what that's doing. And if you look at the big chart, you've seen the dark blue line, which was that new construction trend from last year, right? Started high in January and kind of dropped off. The average price in the end of the year was $484,000. This year, the average price of new homes in March is $468,000. So it's actually dropped another $20,000 in just the last couple months. Now, I want to remind you that that doesn't mean builders are slashing prices and giving away product. That just means that most of them pivoted to a smaller product, right? Something with maybe a few less features. It had nothing to do with them cutting profits and jeopardizing their employees or anything like that. It really strategically being part of the builder new construction community and actually a specialist in it. I'm part of some of those decisions when we make recommendations. It's like, this square footage is selling really good. Let's pivot to that, and we move around a little bit. That's a business side. When you're a mom and pop, or you're a first-time home buyer, you're a newlywed, you're a retiree, and you're selling your house, I mean, obviously it's not something that you can fluctuate based off of the amount of volume you're going to sell. You get one-time shot of keeping the highest, or reaping the benefits of the highest price possible, right? Or buying at the best price and terms possible too. So we coach and navigate through that through advisory consultant role, and we're here to help definitely do that. So this month in March, we don't have our data because it's not done yet. So we only can look at January and February of closed data, and we saw that the total market was the average price of $428,000. And then of course the new construction was $468,000. Those were the total sold for that month, right? And then our next slide is of course the year slide. We are looking at how much we've volume-wise or unit-wise we've sold over the last years. This slide goes back to 2007. 2007 was also a market crash or a recession that began, and you can see that it took almost till 2019 or so until it was actually leveled out with what our appreciation rate was. So there's a long dip there, some ups and downs in the couple months. So we're kind of expecting that same thing after the 2022 recession beginning, right? So we're going to see a long trend. It's going to rebuild its way out. We don't expect the interest rates to drop this year. We kind of think that maybe midterm next year that we'll see some help there. They might fluctuate a little bit. We're hoping that the Feds did, but they just met and they didn't do nothing. So they aren't helping that out too quickly. But keep in mind, if the rates drop, the inventory is going to go quickly. So if you're a home buyer out there, I'm just going to try to encourage you to get out really quick. If you're a home seller that's got one of those rates you just don't want to part with, keep this in mind. If you don't sell while you can, you won't maybe have options when you go to purchase to look at that next house because the inventory might be consumed up. So there's always this balancing act when you're making the decisions. We're here to advise you and consult you. This is a macro scope, right? This is the entire Tri-Cities, the PAC MLS market data report. Your neighborhood, your home are very specific, and I would call it micro, and we can actually look at those numbers, run a similar report to show you a trend of what that would look like, and maybe the optimum time to actually put that on the market and make that move. Whether it's a lateral or you're moving up or you're downsizing, anything like that, we're happy to help. I hope you've subscribed to our channel. I hope that you are getting information from this. I'd love to hear feedback from you. Comment below or send me any questions. Well, thanks again. I'm Ken Poletski with Community Real Estate Group, and we're here in Southeast Washington State, helping the Tri-Cities market from Walla Walla to Yakima, Pasco, Kennewick, Richland, West Richland, all the way to Moses Lake. Thanks again, and you have a great day.